All the decisions of all the money in the world is reflected in this. It's simply a question of, is the money buying this?
While the market may move on headlines, many successful retail investors know there's one main trend to follow.
It's noise, ignore it. Look at the money, and the money is the chart.
Felix Preen with the Goat Academy is known for following the money and the action in the charts.
People often look at charts like this and they go, oh, it's too late. But it is actually the stocks that are moving up that are much more likely to keep moving up.
In recent months, markets have rewarded flexibility, punished conviction at the wrong time, and reminded everyone that price can move faster than narratives. Felix Preen of Goat Academy has developed a reputation for cutting through noise, focusing momentum, and helping traders stay aligned with markets and what they're actually doing rather than what we think should happen next.
You will not find a better place that will educate you on how to trade, how to utilize options, how to trade long, how to trade short.
The biggest difference to me in this program was just the one-on-one coaching. The group calls are great, the community elements are great, the videos are great. Felix teaches you rules and knowledge to apply to your own life.
If you could find something simple that has a good success methodology, it's very helpful for people to understand it and grasp it and be able to apply it. Just kind of do it at your own pace.
This is the right place to be. Thank you, Felix, and everyone else at the Goat Academy.
It's just been really very impactful and amazing.
The best thing that we learned was, how to manage the risks and how to take charge of our portfolio.
I'm feeling more in control. I feel like I've been given the tools, the resources, the knowledge, the education, and I don't feel like the stock market is a big mystery.
There is no better way to learn how to actually trade. You've got to go to the Goat Academy.
Very happy with all the education on the platform.
Very, very glad I joined.
Both of us going into retirement.
And then I joined Goat Academy about a year ago almost, learning everything they teach and how to follow stocks and stops and all that stuff has really helped me. And I thought I was doing okay before, but with a little bit of the discipline and the education, it's really made a difference.
My name is Felix Preen. This is Winston back there, and we used to be investment bankers.
I love what you do. I'm so grateful we're friends. I'm so grateful I got to know you.
Felix here, and welcome to you. If you can see me and hear me, if you put a 1 in the chat, I would truly appreciate that. Apologize for a slightly scratchy voice today. All the traveling the last few weeks has been taking its toll on that particular organ. But I'm very excited you're here. And first, of course, is that this is not financial advice. I am not a registered financial advisor. I'm not going to tell you what to buy or sell. What I'm going to do instead is share with you the rules that I learned from my mentors in banking when I was working there, and also from Wall Street mentors since, about when to sell. Because it is the lowest hanging fruit. It's the biggest mistake I see. Everybody who comes to us, we look at their portfolio and we go, we wish you would have shown up a few months before. But you're here, which is brilliant. So let's jump straight into it. And let me ask you a question. Do you think big losses are avoidable? Yes or no? Is it just luck? Is it random? Is it avoidable? Let me know in the comments down below. And you can be a skeptic, by the way. That's also completely fine. I'm always a skeptic. So let me show you some of the, so then we got the yeses, we got random, we got avoidable, we got all sorts. Let me show you the biggest losers of the last 6 months. 2026 lists of losers. And who recognizes some of these stocks? Just put it in the chat down there. Intuit down 57%, Lucid down 49%, Snap down 46%, Lululemon down 46%, Salesforce down 38%, and so on. These are pretty big, famous names. And you see, any stock, no matter how big, and these are all really major stocks, some of these stocks will just go down. That's just what happens. And if you are a subscriber to the buy and hold everything theory, which most of us sort of where we come from, right? It means you are owning losers and winners. And often the losers drag you down, even in a bull market like this. This is like the best market we've been in a generation. And it's the household names, the good companies that everybody sort of thinks are brilliant. They can go down 30, 40, 50% more. And a big name, a big stock will not protect your money. The money just moves on and it leaves clues. And there are signals before these big losses happen, and that's what we're going to get into today. But there are also these. Anybody own any of these stocks? There is Dell, there is Micron, there is ARM, there is Intel, the same 6 months period, 2026, and look at the difference. Can you see the difference? Yeah? Okay, so the person who sold, say, Lucid at minus 10%, and then put their money into, and then put their money into, say, Intel, they didn't just avoid a 49% loss, they captured a 180% gain in, say, Intel. Let me get a pen, because I know I'm throwing a lot of numbers at you, and sometimes that goes whoosh, right? Which is normal. So if you sold one of the losers and put it into, say, Intel, you would have avoided the 49% loss, right? You would have then added on top the 180% gain. So you're effectively better off by, say, 230%, which is pretty good, right? One decision. Or maybe you don't own any of these stocks. Anybody, who doesn't own any of these losers here? Just say me. If you don't own any of these losers here, you're loser free. But maybe you own, anybody own SoFi? SoFi is 32% down this year. Yeah. Anybody own Palantir? Palantir is 23% down so far this year. Yeah. And then you could have been in any of these stocks here on the right. Would that have been a better outcome? Yeah? And I'm not promising you financial outcomes. I'm just illustrating to you the importance of making better decisions. Yeah, is that landing for you? Yeah, if it is, put an L in the chat for landing. And here they are again. Same market, same 6 months. One group is down horribly, right? Really, really horribly. And the other is up over 100%. Now, 100% is double. 100% is double your money, right? Just to make that clear. So who wants to learn how to never have big losses like these again? Anybody? Is that what we're here for? Okay, brilliant. We'll do that. And I apologize if I'm going to be slurping on my tea a little bit more frequently today. So my mentors taught me a very simple thing. They said, come up with a simple process, because you can remember it, you can follow it, even you, yes, and even me. And I'm going to teach you today a 3-step process of selling. 99% of investors have no exit plan. And I know because we've taught some 6,000 students or something like that. And we talk to them and we look at their portfolio. And it is just mad. It is like getting into a car with no destination. And it just drives around randomly, like getting in one of those Waymo things. I was in San Francisco 10 days ago. And those things driving around everywhere. And you just got in and said, take me somewhere. And occasionally it would take you to, the Golden Gate Bridge, and there's a beautiful view, and there's some amazing, lovely restaurants on the other side, and so on. And occasionally it would dump you in Union Square so you can hang out with the fentanyl addicts. That is basically what you're doing with your money, because you are not deciding where you're going to get out. So our 3-step process is very, very simple. We protect, we profit, and we automate. Protect, profit, automate. We're going to get into more detail on all 3 of these, of course. And if you stay with me until the end, as a bonus, I'm going to send you a full workbook of everything that we're covering here today. I'm going to send you that by email. So if you're committed to making the most out of today, then write committed in the chat, and we'll make you into a better investor. But you got to stick around till the end. You actually got to be here. You actually got to listen. Yeah? I'm loving a lot of commitment here. That's the most commitment, I think, in any Zoom chat on Earth. About 3,000 people here live or just on Zoom, which is cool. Plus, of course, you chaps on YouTube. Now, there we are. I'm going to send you that, okay? So here's what nobody tells you. You can literally buy the greatest business in the world, and if Wall Street sells it, you'll lose money. It's very simple. Can be the best business, the best product, the most handsome CEO, that kind of stuff, and it doesn't matter. because Wall Street isn't really about quality. Wall Street is really just about where can I make the most money today, this week, this month, this quarter. They don't care about you. They don't care about your great stock. They don't care about a single business CEO story, whatever it is. They don't even care about the greatest innovations in the world. Couldn't care less. They just want to make money this quarter so they get a big bonus. That's the way it works. So let me be very straight with you before we dive into this deeper, what's going to happen here today. There are 3 levels to this game. Level uno is the foundation, is the free stuff you get on YouTube, the basic concepts, the awareness, safe education. Useful, yes, but how many YouTube videos have you watched? Give it a guess on finance, put a number in there. And then tell me, has that fundamentally made you into a confident investor who really knows what he or she is doing? Not really, right? No, it's really useful, but it'll only get you to a certain level. It's a bit like reading a newspaper, if any of you still do that. It is quite useful, but it doesn't really help you make better decisions. So that's what we're here today, right? Level 2 is today. This is the application phase. So you're going to learn the actual system, the system that I use. I'm going to give you the actual rules. That'll make you a lot more informed. But I must also disappoint you terribly here, and that there is a level 3. I call it mastery. So we put everything together. And why is that there? Because I'm withholding the most important information from you. No, that's not it. It's just we have 2 hours today, and I will go through this fairly speedily because I want to give you a ton of value today. But there isn't a skill on earth that you can master in 2 hours. Right? You guys are drivers, swimmers, walkers, cyclists, wood choppers, car repairers, ball hitters, and all sorts of forms of sport, right? And then ask yourself, did you learn that skill to the degree you today mastered by in 2 hours? No? How many hours have you guys been hitting and throwing balls for? Think about that. Yeah? This is a skill like any other. So it's going to take a little bit longer than just the 2 hours. Yeah? Thousands, yes. Committed to stay to the end. Brilliant. All right. So you're going to get level 2 today. I'm going to plant some seeds for level 3 throughout of this because I'm going to give you something very valuable today. It works. I believe you're going to make better decisions after today, but it is this foundation of something bigger. And I just want to be very, very clear with you on that. Fair enough? Yeah, put an F in the chat if that's fair enough. And we go straight into it. Okay, I'm loving all the Fs there. Can we get 3,000 Fs in the Zoom chat? Let's see if we can break it. We have actually broken it before, which was quite fun. So wealth creation is a very, very simple formula. You take $1 and you add time in a growing investment. And what happens? More wealth. That's pretty simple, isn't it? Put your money into a growing investment over time and you will be richer. That is basically the foundation of investing and Wall Street. So how about this buy and hold forever thing? Isn't this just this thought that, why don't I just buy a good company and I'll hold it forever? Right? Isn't that what Buffett does? It's not true, actually. His average hold period is about 6 years and declining. It isn't true. Plus, he buys such a large stake in the company that he gets to run it, which typically you don't. So let me show you 2 stocks here. One is called ServiceNow, one is called Google. If you'd put $50,000 into both of these a year ago, what would have happened? Today, ServiceNow would have made you much poorer. You'd have half your money. Google would have doubled your money. But the difference between making the bad decision and the good decision is tremendous. $75,000. But some of you, and put your hand up if you think that, you still think, well, I could have just waited, right? ServiceNow would have recovered, right? And I wouldn't have lost anything. Is that right or wrong? If ServiceNow, this stock here, goes back up to there, so you're back at 0, have you lost anything? Have you lost anything? Yes, no, time. It's a bit more than time, quite frankly. Well, you had lost the opportunity to be in something that doubled your money. That's the first thing, which is much, much better. So even if ServiceNow goes back up to where you bought it, back to the $50,000, you lost the opportunity to, in this case, double your money. It's lost, it's gone. That opportunity is never going to come back. Right? So my question to you is this. How does the stock market determine which stock price goes up or down? It's a real question. If you have a thought on this, put it in the comments down there below. Because there's a buyer for every seller, isn't there? And I'm just being annoying now, aren't I? News, profit, algorithms, magic. I like the magic. Hard, sentiment. Okay, the answer is very simple. Picture a market stall. I grew up in a town in Hamburg. There was a market every Wednesday outside my primary school. And there'd be a chap there and he'd be selling cabbages or something. It is Germany, they sell cabbages. So what happened? Well, he didn't have a price tag. He would look at the number of buyers around the cabbage stall. And when there were lots and lots of buyers, he would ask for a higher price. So in the mornings, around 11 o'clock, when all the mothers would show up and buy their cabbages, the German mothers buy a lot of cabbages, he would charge more. Now, when there were very few buyers left, sort of 4:30 p.m. as he was about to wrap up, but he still had some cabbages left, he would accept lower prices for the same cabbages. Makes sense, right? Stock market works very much the same way. It's a question of what the seller is willing to accept. Some of you seem to have a small screen of mine. You have to click on that screen and make it bigger. I think that's it. Zoom typically has 2 screens just to make you generally confused. Now, why the heck should you listen to me? Good question. My name is Felix, if you hadn't noticed. I'm an ex-banker. I am definitely not smarter than you. I barely graduated. Who's got a better GPA than me? Go on, put it out there. It always makes everybody feel a little bit better and me feel a little bit worse, which is a fun thing to do. Yeah, I really was not very good at that. I founded the Goat Academy 6 years ago. We've taught well over 20,000 students. That's my mentors, mostly, not me. And I'm also the co-founder of some fintech companies where we basically make good information available to regular Joes like you and me. I'm retired. I'm 46. I'm having a blast. Here we go. There's a screenshot. That's a little bit out of date of how many students we've taught. It's a little more than that. And if you watch me on YouTube, I think you get a fair idea of what this is all about. Now, why do we really want to protect our investments? Why are we running a whole session on selling? Wouldn't it be better just to find the greatest stock in the world? Well, your money is literally the result of a life work. And I always say every dollar out there is basically an hour of your life. Right? Every dollar you've got in your portfolio or bank. So if you respect your life and your time, you'll protect your money. Bit somber, but true. So the good news is there's a very simple way to protect your money. And I didn't invent it. It was invented probably more than 50 years ago by some chaps in New York and in Chicago. So imagine this. All the stocks in your portfolio are flying up day after day. You don't watch your portfolio with dread. You don't check your brokerage app frantically every few minutes anymore. And you know that if one of your winning stocks starts to drop, profits will be taken automatically. You keep all your home runs and you never ever have a big loss again, ever. Right? That's what life feels like for me after I mastered this particular approach for selling stocks. Do you want to feel like that too? Go on, put a me in the chat. Let's wake up here, my friends. Jump up and down or something. And what we're going to do is teach you how to follow the money. Every stock chart in the world shows you what the big money is doing. It's just we haven't been taught how to read it. It's like a language we don't know how to read. There is literally one simple selling rule for investors. You might want to take notes because you'll forget. There is one rule, and it's called the 150-day moving average line. Moving average line. I'll show you how to set those up as well. There'll be bits where you just go, I don't fully understand this yet, and we're going to repeat it, and we'll do a big Q&A as well. This is the one line that you need to know. And if you look at PayPal here, or PayPal as I call it, it had a beautiful run up. It was a glorious stock. It went from, well, it more than doubled, it almost tripled. And then what happened? Well, it went down, I don't know, 80%, 90%, something like that, right? Something like that. I think 85% down. So buy and hold, not so much, right? But if you'd sold here with our rule, would you be a little happier? Yeah, probably, right? So now, how do you know that a stock is about to drop through that line? How do you know? How do you know? You just check this chart every 3 minutes frantically, like some sort of lunatic. Yeah, is that what you do? No, it isn't. So I built a piece of software with actually one of my ex-students. He used to work at Twitter, funnily enough, for Anthony Noto, oddly enough, who's now the SoFi CEO. He's called Jeff. He's brilliant. And we built this thing together. And one of the things it does, it allows us to set up alerts. So if you own a stock, I'd encourage you to go and do this. You click on this little alert button up there, and then you say, if my stock crosses the simple moving average of 150, send me an alert. And then my phone will ping. And that's what I do for all my stocks. Useful? Would that be useful? Yes? It would be useful, wouldn't it? Do you want access to it? Who wants access to it? Yes? You want it for free? You do, don't you? Okay, so I'm going to give you access to this. I use this every week. I give you a 3-month access to it. It's called tradevision.io. And you can go to freetradevision.com. Freetradevision.com. I'll put the link on the screen here as well for you. Where is it? There it is. So you can grab yourself that. And it's a free thing, just as a bonus here for showing up. If you don't like it, cancel it on day 29, so you never get billed, please. Or message us if you forget. We're quite lenient on that sort of thing. But it's exactly the tool I use every day. Yeah. And thanks, Lorraine and Louise, there for putting the links in the chat as well, rather aggressively, if I may say so. So do that while I continue, because the link will only work while we're live. So let me ask you a question though. How many traders do we have? Because I'm assuming that most of you are investors. So my focus today is investing, because the simple rule I just gave you won't really work if you are in high risk stocks. A lot of people will tell you there is one rule, but that just isn't true. If you buy tech growth stocks, you're not really an investor. You're a trader looking for a 10x return, right? So if you're one of those, put a 10x in the chat if you're a trader, an I in the chat if you're an investor. Do you remember Plug Power? It was sort of a post-COVID darling. If you followed my rule, what was the rule? You guys remember? The 150-day moving average line. If you followed that, then from the top to where you would have sold, you would have been down minus 55%. So half your money would have been, sent over to some lovely guy on Wall Street who really needed it because he needed another Lamborghini. Now, it is actually better than what most people did, because right now the stock is down minus 95%. So it still would have saved you quite a lot of money and you would have done better than most, but it's definitely not ideal. So who wants the trader's rule? If you want the trader's rule, put a T in the chat. Or if you are both, because you can't decide or you're just greedy, I do both. I invest and I trade. What I'll do for you is this. I'm going to teach you the trader's rule. We'll do that in the Q&A, okay? You remind me, but I will remember, and I'll teach it to you there. So why am I teaching you the investing rule first? Because it's the foundation. You need to understand that to be able to understand the trader's rule, in my humble opinion. Sounds good? Yeah, let's do it. Now, talking of risk, based on the returns you want to show up in your life, you guys are making decisions every week. And you are picking essentially a car. Now imagine your stock you're about to buy is actually a vehicle. And some cars are nice and safe and comfortable. Tesla, for example, it's the safest car in the world, right? It is just safe. It is the Volvo of its time. But some of you are picking this sort of thing here, which is called a top fuel dragster. And yes, it is very cool because it's a little bit faster. It accelerates, I think, in under a second to 60 miles an hour. But flames come out of it, which is a sign that it's a little bit more risky than the Tesla with, wraps you in airbags. So ask yourself, the biggest loss you've had in the last year, was it more like the Tesla or was it more like the dragster? Put a T or a D in the chat down there. And I see mostly Ds. Now, for those of you who put Ts in, we might need to go a little bit deeper on what is actually risk. And we'll do that a little bit in a few minutes. Now, I'm going to show you here something that people never do, because people always show you all their winners, right? Social media is full of people boasting about things that doubled their money. I typically don't do that. So I'm going to show you my worst stocks from 2025. These were my worst losers. And I'm not so insecure that I'm going to bombard you with my winners on the next slide. I just want you to take away from this that everybody has losing stocks. The question is not, do you have losing stocks? The question is, did the loser cost you a teeny tiny amount of money, or did it cost you your retirement? Now, you can see the size of these losers. And I can also tell you that I didn't click the sell button on any one of these. We get into that in the third section of this in a few minutes, but just to be a little bit transparent here, right? Now, let me show you when I bought this stock and the rules that sold it. So I bought this, where did I buy this? Good question, actually. How much did I go down by? Not a lot. So I would have imagined I would have bought this probably there. I can't quite remember because it was a long time ago. But I think that would have been my buy. So did I sell it? Yeah, I sold it here, right? Where our rule kicked in, because that purple line there is what? What's the purple line, guys? Who's awake and paying attention? There'll be a cookie in this if you get this right. Martin's awake, Linda's awake, Andrew's awake. Brilliant, guys. Chat's a little fast. I can't read you all out, I'm afraid. Right? So that's where I sold it. Was I unhappy about that? What do you think? Do you think I was unhappy about that? Actually didn't really notice it, to be honest. Now, what about this one here? I bought this one, if I'm not mistaken. It's a good question, actually. Let me have a look. EXE. It's not even on the list. Okay. Anyway, either I bought this here or I would have bought this here. I'm not quite sure. But either way, I lost money on this for sure, right? So I would have sold down there. That was the line. That was the sell. Now, if you'd bought this like me, would you be happy you sold it where I did? Right? Let's just say you bought it. Let's say we all bought it up there. That was the buy, and we sell it down there. Some of you say yes, some of you say no, because you're taught that losses are bad. They're not. Small losses are actually good. Big losses are bad. Right? And right now, or as I took the screenshot, it was much, much lower. So I avoided a larger loss, which is definitely good. So let me show you this. And it's from the same account that I just showed you all the losers from. Each circle is one stock. Right? The higher up the circle, the more profit. And the lower down the circle, the more loss. Right? So the higher up it is, the bigger the win. The lower down the circle, the bigger loss. What do you notice? What do you notice? Put it in the chat what you notice. Smaller losses, yes. Yes, you're right. You guys are smart, right? So the worst loss down here is about 20% down. And the biggest gain up here is about 90% up. So we are getting it right in the sense that we have big losses So big wins rather, and small losses, which is the point, right? Now, why have I got so many here? Because I sold something and I bought a piece of land, but that doesn't really matter, right? Now, your new outcomes after today, if you pay attention, you stick around and you commit to this, are that there'll only be 3 new outcomes. And I don't know if you realize how big a deal of this is, because I would say 80 to 90% of retail losses are down to that one big loss. So you walk away here today, never ever having a big loss again, right? I'll be a little bit excited about that. If you are, put an X in the chat. Excited to know your money is better protected. Do you know, excited to know your retirement won't be pushed back by years because you make one bad decision? Yeah? And I've seen a lot of X's there in the chat, which is brilliant. So I'm going to show you how to set this up for yourself, but the outcomes are these. Big wins are allowed. Yay. Small wins are also allowed. Yay. And then small losses are also allowed, and it's a little bit harder to get excited about that, but you will. Now, the fourth one that most people do is what? This is the big loss. Right? We don't permit big losses. It's just not something that we do. Wall Street doesn't, hedge funds don't, at least the ones properly run. And it means we have money tomorrow. We can invest again. We can keep growing our portfolio. If you lose half your money, you're kind of screwed, right? Now you're going to have to go get another job. So I'm not going to bombard you with testimonials today because I want to be respectful of your time. But I just saw this one. It just popped up in my feed. And it said, I joined Goat Academy on Monday, like 1 week, started off going through the modules. And I learned the structure of when to buy and sell with confidence. I made my first trade on a stock which I've been monitoring. I was able to get in the trade more confidently than before, and I feel more relaxed after making the trade as I have followed the modules to set up my exit plan. Right? 1 week, the guy feels more relaxed already. Isn't that cool? You want to feel more relaxed? Yes? Yes or no? Do you want to feel more relaxed? Put it in the chat. So that's really what it's all about. It's precisely about that. It is about confidence. It's about feeling more relaxed, and it is about having better outcomes. Yeah? So if we stopped right here, would you have gotten value from this? You would have said it's a bit short, but I got value from this. Yes or no? Strong yes. That's very kind of you. You can say no, by the way. I'm fairly thick-skinned. So you have a sell rule now for investors. Now it's time to talk about taking profits, which is a little bit funner, right? And there's a lovely quote here from Peter Lynch, who's a great man. And he says, the real key to making money in stocks is not to get scared out of them. So let me ask you this. Who here has regretted selling a stock too early? Put it in the chat. Yes or no? Oh, yes, yes, yes. You've regretted selling too early. I see some tickers even in there. Micron, for example. Yeah, that one ran up very, very nicely. So why is it important? Why is it important? Well, a losing stock can go down 100%, can go to 0. But a winning stock could go up 10 times. You see what I mean? So if you put $100 into a stock, you can lose how much? $100. I bought 1,000. That was not the intention. How do I delete on this? You can only delete all of it. It's a give or take sort of a thing. Okay, so say you put $100 into a stock. How much can you lose? Provided you don't use leverage, which I highly recommend. You can lose $100, right? Now, if your stock goes up 10 times, then how much can you win? Well, you could win $1,000. So you could literally win 10 times more than you could lose in sort of extreme scenarios, or limitless even gains. Yes, you're quite right. So therefore, it is important that we don't chop down our winners on day one, which is what a lot of people do. So there are 4 things that make stock selling more successful. They are sell first, the 3 covenants, we're getting a little religious here, and fundamentals. I'm going to write that down. I'm going to walk you through each of these in some detail. So Sell first, what does that mean? What does sell first mean? We decide when to sell a stock before we buy it. Sounds odd, but it's exactly what we do. We decide when to sell before we buy. If you just learn this today, honestly, your life will be completely different. So I write down my sell point before I ever buy a stock. I know when I'm going to sell it before I buy it. Right? And if you literally follow this simple rule, you will do better than 90% of all investors, I guarantee it. Why? Well, to start with, it takes the emotion out of that decision. It is a decision already made. You know? Give me an example. I will walk you through some examples, so don't you worry. So we've covered the first part. Right? We're going to look at some charts together, don't worry. Part two, who wants it? Profit taking. Who wants to take profits? Covered self first. 3 covenants and fundamentals are coming next, right? So what are the 3 covenants? Well, if you want to be a calm, happy, and more profitable investor, you must swear allegiance to the following. And you need to write these down. You will never buy a stock below the 150-day moving average line. That's rule number 1. Covenant 2 is you will never ignore your sell rule. There is never a, oh, this time is different. No. And this time is never different. Yeah? It's fairly simple stuff, isn't it? But nobody does it. But at least in retail investing, nobody does it. Institutional investing, they all do it. If you didn't do this and you're working in a bank, you'd get fired. Or worse. Yeah? You got these down? Have you got these written down? Are you going to stick with it, to these? Yes, no, si, no. Okay, we've got some commitment here. We didn't let French people into this room, did we? Okay, brilliant. Now, we've covered sell first. We've covered the 3 covenants. So what the heck are fundamentals all about? It's the place where most people start. It is important, but it isn't quite what you think it should be. Fundamentals are part of our risk management. We essentially ask ourselves, is it a 5-star safety rated Tesla or is it a super high risk dragster? After this, I'm going to go and look at a classic Mercedes from the early 70s, for example. And of course, what I'm going to look at is brakes and tires and that sort of thing. Like, is it safe, right? That's the risk management part. I'm not buying the car because I care about risk management. No, I'm buying it because it's a beautiful old car. And that's the same with the stock. You're buying it because you want the profit, you want the shininess, but you have to look at the risk level you're taking. So shall I show you how I do that? Shall I show you the process that I go through every time I look at a stock? Yeah, okay, I get some yes please. So you guys are very polite today. So I have another tool, it's called the Winston app. And in it we have about 12,000 stocks, so pretty much every stock in the world, including stocks from you Brits and the Soviet republics of Europe and Asia and in Australia and all that sort of stuff. So what do I do? So let me just say, you want to buy tech stocks, because I know most of you guys are tech investors, right? So you click on tech and United States in this case, and I get 900 results. So, but let's just say I wanted to buy one of, say, 10 stocks or something, right? So you can also put them in manually. I'll just click on compare the top 10 here, and I'll look at this. This is literally all I look at. And for these stocks, assuming I wanted to buy one of these 10, right, this is my shortlist, I would look at how stable is the business, right? Is there one in here that's a problem? Grindr isn't very stable, surprise, surprise. Which of these has got lots of cash? Actually, most of them. This one doesn't, right? So maybe I'd throw that one in the bin, right? And then I'd look at maybe profits, sort of last. But really, I just want to look at, are these solid businesses? And this is a list of very, very good businesses, clearly. But if you looked at, say, quantum stocks or biotech stocks or something, the numbers would look a lot worse. And in that case, you'd still want to pick, I would argue, at least the most stable. Because stable in cash means they'll survive, right? Some stocks won't. So Very simple. No? Very simple. It takes me less than a minute to do. Do you guys want access to this too? You want access to this too? That's not TradeVision. No, it's called the Winston app. I've got a golden retriever with a very large nose called Winston. So I named the app after him because he's very good at sniffing out data. But literally for every single stock here, you can see it on the right. You can see our sort of summary of it. I'll give you access to that too. Okay, so bonus numero dos is I give you a free month of the Winston app. You can go to gogetwinston.com. Winston will be very happy about that. There it is down below. And you can also get that, again, if you don't like the app, you just cancel on day 29, right? And therefore you will never ever get billed. If you like it, I use it every day, every week. I find it very, very useful. And we got some really cool stuff coming up on this one as well in the next few days. So who's going to get the W app? Put W in there. Does it include ETFs? It does, actually. Yes, I'm not going to give you a full walkthrough here, but yeah, it includes every ETF in the world pretty much. And again, you can organize them, do the same sort of analysis that we just did here with that, right? So you will see exactly what they do and what they own. But yeah, it's got ETFs, it's got gold, silver, it's got research, it's got kind of everything that we need to know from a fundamental point of view. Yeah. You got that link down, gogetwinston.com. Thank you very much. Appreciate that, guys, for sharing the link there. So we've covered what? The 3 criteria of profit taking like a champion. Have you got them all down? If you're unsure, again, it's okay. My goal is to give you a little bit more value than perhaps will sink in entirely. But if you stay with me till the end, we will clarify it. We'll do a Q&A. You get a full workbook and so on. But 3 rules here: sell first, the 3 covenants, and then we look at fundamentals to tell ourselves, to find out how risky this particular stock is. The throat is actually holding up a little bit better than I thought, which I'm very pleased about. So, question. Are you getting excited about this? Are you getting a little bit excited about what's going on here? Because we haven't even covered the best part yet. And you already know how to avoid those large losses, right? Which is what holds investors back. It's really the one thing that holds people back. That stock that you've got what's the worst stock you've got right now that's like down? How much is it down by? 30, 50, 70, 80%? Go on, be honest. What's living in your basement right now that you're not sharing with your spouse? Wow, yeah, some big numbers. And it's annoying that I'm telling you it's avoidable, but it also means that tuition that you paid to the market, or rather a little twit in Midtown New York with a little vest on, which is what they wear if you haven't been, the bankers that is, at least it was worth it, because you now no longer have to do that again. And there is some real value in that, I would argue. So if we stopped right here, once again, would you have gotten more value from this session than from any other financial training you've ever attended? And you can say no, by the way. Definitely, just get on with it. All right, fair enough. Okay, automations. This is where the real money is made. Doesn't sound sexy, but it's where the real money is made. Because the problem is somebody out there wants you to lose on every single stock that you buy. And he has access to your brokerage account. I'm not trying to scare you, but it's true. There's somebody out there who wants you to lose and has your password to your brokerage account. And of course it is you. There are literally hundreds of behavioral science papers that show again and again that investors are their own worst enemy. Every bank in the world knows this. So they have their great stock investors monitored. Every click is tracked. There are cameras that watch the desk and the screen. And it's a simple problem. We're humans. When I sat on a trading floor of an investment bank in Hong Kong here, our risk manager sat behind me. He literally sat behind me. Like we're on an open plan floor. We couldn't get away with murder, right? He knew what we were doing. And he'd walk around and he'd look at what we're doing all day long. It was very annoying. And he did that because as humans, we have emotions. Now, emotions are a beautiful thing because it was what makes us humans, right? I lost 2 of my cats the last year, and I'm very, very sad about it. You could start, blithering on and crying the second I mention it, and I'll try not to do that here. But something that makes you emotional, sad, upset, will impact the decisions that you make. Maybe it could just be that you're tired or stressed, like you had an argument with somebody you care about. And knowing that, you must distrust yourself. I distrust myself as an investor. And that is why we need to automate our rules. You cannot trust yourself to make the right call in a moment of stress. I mean, your stock drops 10 or 20%, you're stressed. And then maybe on top of that, your boss shouted at you and, you had a silly argument with your wife or girlfriend or whatever about, I don't know what. And you're in a strange position and now you are not going to do what you're meant to be doing. And now that minus 10% becomes minus 30%, and then minus 50%, and minus 70%. Yeah. Is that something you've experienced before? Does that feel familiar? Put an F in the chat if that feels familiar. Yeah, right. And again, it makes you humans. It's what makes us into nice people, but it's also a weakness that we need to recognize. So, 50% of your money is lost in the selling, and 50% of your money is lost in the not selling. So, what do I mean by that? I mean, investors sell too early. So you set yourself this random exit point. Oh, it's up 20%. I want to lock it in. I'm scared, right? And then the stock goes up another 100%. Right? Annoying, probably happened to you. That's happened to you. Put me in the chat. And then the other half is that you don't sell. And we go from minus 10% to minus 30% to minus 50% to minus 70%. And now we're keeping secrets from our wives, right? And I know that there are some women in the chat here, right? Can we see some, I don't know, some hearts or smileys or something? I think a few of you snuck in. And I say it that way because my YouTube viewership is about 90% male for some reason. I think it must be the very masculine sort of vibe that I give off that attracts all the men. But in all seriousness, it's true, it's what we do. And one of the things I would highly recommend you do if you're a couple or a family, once a week, go through your investments. It'll take you 15 minutes, stressful the first 2 weeks, and then it actually becomes a really nice ritual. I do it every Monday. So every Monday I go through everything that I own, all assets, all income, all businesses, everything, and we talk about it as a family. And it's a beautiful thing to do. Stressful at the beginning, I totally get that. But then it means you all end up on the same plan. It's a really, really, really highly good thing to do. I'd highly recommend it. And also, women are better risk managers. Yeah, women are better risk managers. Winston is the draw. Yes, clearly, it must be Winston. It definitely is Winston. So the good news, though, is you don't have to be very good at this. Right? Nobody is. Nobody is good at managing their emotions. Well, the psychopaths. So hopefully we haven't got too many in the room here. So let me show you something. This is a screenshot of my portfolio. Some point. When was this? Earlier this year, actually, February. And I know what you guys are all looking at, right? You're looking at, you're all trying to say, what's the profit and loss? How much is he up by? How much money is he making? Is he as good as he says? That kind of thing. But you're looking in the wrong place. Can you see where I'm pointing this great big yellow arrow? And what do you see then? You see that I have a sell order on every single stock that I own. And it will automatically sell my stock when my criteria gets hit for a profit or for a small loss. It'll do it automatically. I never ever manually sell a stock. It is always done through an automation. Yeah, you guys can see that, right? Okay. So it'll save you a lot of money. Tens of thousands of dollars, hundreds of thousands of dollars for most of you. I used to guess a number I wanted as a profit. And tell me, where are you currently selling? What's your present strategy for selling? Maybe you want to make $1,000, or maybe you want to make 30%, some random number. And guess what? Well, first of all, I already got it. But when I got my 30%, I got greedy and I didn't sell. And I said, well, now I want 40%. and I got 40%, I said, well, now I want 50%, right? It's greed. And when I got instead minus 10%, I was like, oh, yeah, it'll come back, it'll bounce back up. So I got fearful, I froze, right? And I got a much bigger loss. So we've already covered how this works, but let me briefly recap it. Understanding literally this one concept will put you ahead of 90% of people in the market. It is very simple, yet it's very, very powerful. Remember PayPal? PayPal went up more than 200%. That means if you put $1,000 into PayPal, you would have had at the top here $3,000. Yeah. And then right now, PayPal is down, how much? I don't know, 95% or something. So you would have very little money. Now let me ask you this. Did I sell at the top? What do you think? Yes or no? Most of you say no. You have very little faith in me, don't you? No, of course you're right. Because I didn't know it was the top. Right? Because think about it. Stock goes up. How do you know it's the top? How do you know it's the top? Well, you know here, somewhere, but you don't know at the top. So it's a myth. Nobody sells to the top of the market. Not Peter Lynch, not Warren Buffett, not Michael Burry. Nobody sells at the top of the market. Because you don't know it's the top until the stock's already dropped. Does that make sense? So here's what we do instead. I set up a sell rule, a sell automation at this lovely rule that I've already given you, the 150-day moving average. Average, if I could spell average. So yes, didn't sell at the top. That would have been the top. Gave a little bit back, but considering the run-up, this is still a pretty great run-up. And it avoided the, walking naked on broken glass sort of type experience, which is what PayPal has been like for the last 3 or 4 years. So how do we do it? Andrew, you're very observant there. Let's talk about that in the Q&A. If you ask me again about that in the Q&A, I will go into that. There is a thing that I call profit locks. A profit lock is an automation that sells your stock when it drops some percentage or at a fixed amount. Now, brokers typically call them stop loss orders, but I don't like the word loss, so I call them profit locks. And they protect us from ourselves. Now, most of you, who has tried a stop loss order before? Anybody tried it? Yeah. Do you often find you get knocked out too early? Okay. So where do you set them? Well, beginners will typically set them at sort of somewhere between -5% to -10%. And that's actually okay. And I tell you why. There is something called the one-to-one zone. Now that we talked about grinder stock earlier, that seems a little inappropriate, but you know what I mean. If your stock goes down, so say your stock's trading at $100 and it drops 10%, it goes to 90. Yes? With me so far? Yes? And then it says it goes up 10%. What happens? Well, you're back to $99. So you're pretty much where you started, right? Give or take $1. That's what happens in the one-to-one zone. You go down 10%, you go up 10%, you're basically where you started. But if you go down, say, 50%, so you start with $100 and your stock drops 50%, you now have $50. Now your stock goes up 50%. How much money have you got? Put you out of your misery. It is $75. It's a problem. If the stock drops 50%, it needs to go up by 100% to get you back to zero. If your stock drops 80% like PayPal, it needs to go up 400% just to get you back to zero. That's a very, very hard thing to do. Right? So therefore, generally speaking, being in the 1-to-1 zone is a much better space because your risk is lower. Does that make some sense? So is that landing for you? I know it's numbers and maths and percentages and your head might hurt and you know, that sort of thing. Yes, lands? Okay, clear, good. Now, let me ask you a third time. Has this been useful so far? I like compliments. I live off them, you see. I feed off them. Okay. Quick check here. Are you feeling more powerful than when we started? Literally. Are you feeling more powerful than we started? Because you should be. You just learned in minutes what takes, well, I was going to say people years to figure out. Actually, most people never figure this out. Can you see yourself using this? Can you see yourself opening up your trading platform, pulling up a chart and actually knowing what you're looking at? Yes? You can? Brilliant. Okay. And if you like, we can pull up some charts together and apply these 3 power moves that you just learned in real time and so on. And I'll also show you what I'll do in the Q&A. I'll show you all the stocks that I currently own and where I would sell them. Yeah? Would that sound good? Would that be useful? We'll do that in the Q&A. Yeah, let's do that. Okay, cool. Application is really where you learn. So you've learned in a very short time together as of today something that most people will never have. You know how to read the market. You know how to, well, you know how to manage your risk like a pro, whereas most people have no rule, no idea, and they're just these emotional human beings, lovely emotional human beings, who will then make emotional decisions or no decisions, which is usually even worse. So you are able to make decisions based on rules rather than on, you know, emotions. And it's a very, very powerful, simple, but proven foundation to allow you to make better decisions going forward. And hopefully will give you a lot more confidence to control your financial future here, right? So for a second here, I just want to stop, and then we're going to go into Q&A. And I want you to forget about the market, and forget about Trump threatening to obliterate Iran tomorrow. Don't think about what's up or down. Just ask yourself this question on the screen here. How long did it take you to get here? And for most of you, it's been how long? Years? 3 years? Too long? 56 years? 1 hour? Someone took this a little bit literally. 5 years, 50 years, 70 years, wow. But yeah, many years. And I don't just mean time, actually. I mean the early mornings when that alarm clock rings, the jobs you didn't necessarily want to do, but you did them anyway because you are building something, right? You're responsible. You're paying a mortgage, you're raising a family, or whatever it might be. And I love that you guys are sharing this in the chat here with us. But the math of life is unfortunate, and people don't really talk about this. But the average American works 40 to 50 years, 40 to 50 years, 40, 50, 60 hours a week. Right? And if you're in this room, you've probably been pretty disciplined along the way, otherwise you wouldn't be here. And the money that you have saved up, the money you've put into your brokerage account, what is that money? It isn't just a number on a screen. Every dollar in that portfolio, it represents an hour of your life. It represents a morning you got up when you didn't want to. It represents a vacation you cut short. It represents something you really wanted to buy, but you skipped it because you were being responsible. So it isn't a portfolio. It isn't capital. It is actually your life stored in a brokerage account. And at the moment, most of you are probably worried about some of that slipping away because of the war in Iran kicks off heavily, or if the AI bubble bursts, or the Chinese AI models are, 100 times cheaper or whatever, then some of these tech stocks that you own are going to tank, right? And you all own tech stocks because you all own index funds. And that feeling, that helpless feeling, is what I want to talk about. And tell me in the chat, how do you feel when your portfolio drops? How do you feel when one of your stocks just drops? How do you feel? Sick, gutted, crappy, fearful, awful, robbed, sick, horrible, like a failure, mad, anxious, sad, bad. And I love you guys for sharing it. And it's normal, by the way. And again, it actually makes you into a nice human being because you have emotions. And I say this with great respect, because I was exactly the same way. Most people will spend 2 weeks researching a vacation, right? They'll read every review, they'll compare every hotel, they'll find the best flight deal, all that stuff, because it matters to them. They want to enjoy it. But the same person will buy a stock based on something they hear on YouTube, CNBC, tip from a friend. It's just a feeling. And they'll hold it while it starts dropping, hoping it's going to come back because they haven't got a plan. They've got a vacation plan, but no stock plan. And it isn't because you don't care. Of course you care about your money. It's because nobody ever sat you down and taught you the rules. The actual rules, the rules that the professionals have been using for more than 50 years. And I say 50 years because my oldest mentor was taught this 50 years ago. He's almost 80 years old. Jerry, amazing guy. And it isn't your fault that you weren't taught this. Schools don't teach this, colleges don't teach this, finance degrees don't teach this, right? But it is your responsibility to now change it because you now know there are these rules. Right? So if you've ever held a losing stock longer than you should have done, just hoping it's going to come back, just put it in the chat or just raise your hand on the emojis. Yeah. Yes, me. Yes, absolutely. Yes, sure. Yeah, we've all done it, right? But we can avoid that. Right? Let me ask you something else. Any drivers in the room here? You guys drive. Who's a driver? You put a D in the chat if you're a driver, or to say yes. Okay, I'd expect that. How did you learn to drive? How did you learn to drive? Instructor? Not my dad. Yeah, so somebody taught you, right? A parent, an instructor. Somebody sat next to you and showed you the rules, yes? And those rules, stop at red, stay in your lane, signal before you turn. Did you invent those rules? No, of course you didn't, right? Somebody handed them to you, they gave you a book. And because of that, you've been driving relatively safely for years, maybe decades. And you don't even think about it anymore, right? You don't think about driving anymore. Now, what would have happened if nobody taught you? If you just got in the car and you went on the freeway one day, 16 years old or something, and you figured it out, what would have happened? Well, some of you wouldn't be here today. Some of you would certainly have been in pretty nasty accidents. Most of you would have probably, hopefully, still survived. But you would have made mistakes that would have cost you a lot. It would have been very painful. Now, investing has rules too. It's just like driving. The difference is no one's required to teach them to you. There is no investing instructor. There is no test you have to pass before they hand you a brokerage account and let you loose with your life savings, right? They just hand you the keys and they say, good luck. Right? When you first opened a brokerage account, did anybody actually teach you what to do? Yes or no? Yes or no? No. No, exactly. And I was the same way. Nobody had taught me either. I was figuring it out alone. I was making all the mistakes, hoping for the best. I lost half of my first investment. And then one person came along and he gave me a chance. And he didn't have to. But he let me in. He was a banker and he gave me a job. It was random. I met him at a party, literally. And he showed me how it actually worked. Not the version you see on TV, the actual real version. And that one conversation, literally 30 minutes of my life, that one conversation with him changed the entire trajectory of my life. I'm sitting here retired because of what I learned from people like him. So here is what I want to offer you guys today. Not a course, not a program, just a conversation. A free call to sit down and look at where you are and honestly tell you whether what we do could help you. No pressure, just the same kind of conversation that changed things for me. Because I think you've worked too hard for too long to leave what's coming next up to chance. So if you're open to having that conversation, just type open in the chat. No commitment. Just tell me if you're open to it. Just write open in the chat. Or even in, yeah, just open, brilliant. Lots of open minds. And that's one of the most beautiful things, I think, in life, is when you meet people who are open to learning something new, who are willing to say, I'm not that great good at this. I'd like to learn how this works. And I want to find someone who's actually good at this. So I love you guys for showing up here. Are we going to get 3,000 opens in here? Some of you, Michael, already a member. Brilliant. Maybe just share with people what your experience is so far. So here's what I'm going to do for you. I'm going to put this link on the screen here as well. You can book a free strategy call with us. It's completely free. Justoneconversation.com is where you do that. And we're going to take 200 of those calls. Now, more than 3,000 people are live. Why are we limiting it? It's just a function of how big our team is. And you can go to justoneconversation.com, or you can click on the link that we put in the chat here for you. And I'll tell you a little bit more about that conversation in just a second, but it is just that, it's a conversation. And while you do that, let me ask you one more thing. How confident are you right now that you know when to sell? Score of 1 to 10. How confident are you? Sort of 1 would be no idea, and 10 would be, God level of confidence. Okay. And then have a look at this chart here on the screen. It's called Microsoft. Where would you have sold it? Or would you be buying it right now, or would you be selling it right now? I'll give you a few numbers in here. So say there is number 1 here, there is a number 2 here, there is a number 3 here, there is a number 4 here. Where would you have sold it? 1, 2, 3, or 4? What do you guys think? Most of you say 3. Okay. Okay. You guys paid attention. I like it. Because one thing I learned with all of this is that true confidence is everything. So if you looked at this chart again, and would you feel more confident if you were on a one-on-one Zoom call with a Wall Street guy who's managed money for the big investment banks, and he was looking over your shoulder, and before you were ever making a decision on when to buy or sell, he would walk you through the rules again? Would that make you feel more comfortable? Yes? Having that 10, 20 years of experience looking at your screen, would that make you feel more comfortable when you're making decisions? Yeah? Okay. Now, would you feel more comfortable knowing what to buy and sell if you saw my watch list every week? If you saw every week what industries I liked and what industries I was worried about? Yeah? Shall I show them to you? I'll show you today's list, okay? You can take screenshots of this if you want. So I put out a note every Sunday called Felix's Notes. And probably the most useful thing in it, one is I look at where the money's flowing. So green is good, red is bad, obviously. So if you own something like, I don't know what, biotech's improving, medical devices, investor managers are improving, and so on. But if you own something like services or something and it's declining, that's quite a good thing to know. And then I also put out, and I'll zoom in a little bit for you on this, the strongest groups, the strongest industries here, semiconductors, materials and equipment, electronic components, in climbing patterns. Medical nursing also showing strength. Weakened industries are electronic products, and so on. So I put this out every week. And the second thing that I put out every week, and I do this every Sunday, I come back to why I do this on Sundays. I make all my buy and sell decisions on a Sunday, by the way. I don't do anything during the week, Monday to Friday. And if that surprises you, again, let me know. This is something I put out for our mentorship students. This is a watch list organized by industries of stocks that I think look good, not to buy right now, but to buy at a certain level. And that's something that's, we're not going to have time to really cover today. But I put these out every week. It doesn't mean you should buy them, but it means that you can check what you're doing against my thinking every week. And I think, again, let me ask you, would you find that helpful? If you did your own research, followed your own rules, and then you could compare it against what I'm doing to see, why is he doing that? And then, of course, we also run one-on-one calls on this, and you can ask questions. Why did Felix look at Bank First Corporation? I just don't think it makes any sense, right? And then we'll explain to you why. So that's what I put out every week as part of that. And it gives us beautiful, beautiful impact. on really lovely people here. And again, I'm not going to bombard you with testimonials. We're going to go into Q&A. I want to show you everything that I own right now and where I would sell it. But just briefly, Vladimir is a student of mine in Slovakia, Central Europe. And he writes, thanks, Felix. Greatly appreciate your help and information. Thanks to you, I'm up X%, whatever, in just 6 months. We blocked these out because of the FTC. And again, it doesn't really matter. But he says, while I'm babysitting my 2 little sons from their kids' room. And to me, that is the cool thing. And then he puts 3 smileys. And if you've met somebody from Slovakia, they don't often send you 3 smileys. He's sitting there, he isn't missing his children's childhood because you can actually manage his money well from home. And that is now his income, which is very, very cool, right? So to me, at least it's very, very cool. I get very, very excited when I see these. So on the call that you guys can book at justoneconversation.com, we're going to walk you through exactly what working with us looks like. But the short version is this. You get access to the same thinking, the same rules, the same frameworks that Wall Street professionals have used for literally decades. And we help you apply it to your portfolio and your situation. That's pretty much it. Obviously, you can ask a million questions about that, but that's essentially that. So go to justoneconversation.com. I'll just show you very briefly how that works. And then we'll go into Q&A and I'll show you, I'll pull my trousers down so you can see what I own. So you put your name in there, Winston. Preen is my hideous last name. An email address, winston@goatacademy.org. We need an email, otherwise we don't know who you are. And then you need a phone number. Can't talk to you otherwise. I'm going to put in the Hong Kong number because at least I know how long they are. And then click OK. We ask you your portfolio size. Why do we ask that? Helps us pair you up with somebody better. It's not hugely important, but just click a number. And then we ask you, are you able to dedicate 3 to 4 hours a week to study? And you might say no. Who's busy? Who's busy? Who's a full-timer who's busy? Put a B in the chat. If you're busy, just say honestly, probably not. And what I'm actually finding is that the busy people are often our best students. Why? You have an advantage. You will come in and you'll say, I have 13 minutes or 20 minutes. What can I learn in 20 minutes? What's the lowest hanging fruit that I must learn this week, but I've only got 20 minutes? And we'll tell you. So you actually often do better than everybody else. And then you can select literally on the calendar here, it'll show it in your time zone, a time that works for you. And you click next, and then you just got to click schedule event. That's it. Okay, you're done. It's very, very quick. It doesn't matter where you are in the world. It'll adjust the time zone for you, and it'll say confirmed, you are scheduled. Okay, and it'll then take you to a page. I've recorded some videos for you. Again, this is for busy people, because if you watch those, you will be able to get through the call faster, in a sense, that you've already understand a lot about what this is about. And again, I always want to be very respectful of your time. So is that clear? Is that clear? If you've booked a call already, put a call in the chat. And we should, I believe, go into Q&A. Okay, quickly, actually, yeah, we have a money-back guarantee. It's a 100% money-back guarantee. It takes the risk away from you, but it is conditional, and I want to just be upfront with you always. I require you to do a few things. So we typically teach our students for 6 to 12 months. Why? The market goes through phases. You can have 3 beautiful months, and then suddenly it all comes crashing down. And therefore, we want to be with you through the ups and the downs, so you really are confident when you leave us and you no longer need us. There is a weekly progress report we need you to complete. It'll take you about 2 minutes. We'll ask you, what are you struggling with? You'll tell us. We'll help to fix it. We need you to watch all the course materials. That'll take you a couple of hours over 6 or 12 months. We need you to make 12 simulated trades. So that's with not real money. It's like Monopoly money. We show you how to do that. And I just wanted you to show us that you really understand risk management, the way we teach it. So basically, 1 simulated trade a month. And then I need you to join at least 12 live coaching calls, which would be 1 a month. I would highly recommend you do at least 1 a week, because it'll hold you accountable. You learn a lot faster, you learn a lot more. And I think given that you're here and that you are the kind of person who shows up for this sort of thing on a weekend, you would probably at least talk to us once a week, which is what I would recommend. So you do the work, you get, or you get your outcomes, or there's a 100% money back guarantee. Yeah, very simple. One more question that I get a lot. Who's wondering, why is this guy teaching me this? It's the weekend. Why the heck does this guy do this? And maybe I can add on top of that, actually, my mentors are all retired investment bankers. We've done this for 20, 30, 40, 50 years. They don't need the money. They've had very good careers. Why the heck are we doing it? Who's wondering that? Because you all care. That's very kind of you. People throwing numbers around, by the way. 28K, nonsense. Anyway, so I'll read you 2 lines here. Carlos is one of my mentors. He's called Carlos from Latin America, a lovely chap. And he's a beautiful man because not only did he work in the industry, but he's also a professor. So he's actually perfect because he knows how to teach, doesn't just know the rules. And he says 2 years ago, when the son, that's me, gave this strongly accented professor a chance. Nobody ever comments on that, by the way. He said, I had no idea it would turn into one of the most fulfilling adventures of my life. From day one, the students' feedback, their gratitude, and seeing them feel truly empowered to take control of their destiny has been incredibly rewarding. That's what we do. It's just fun. It is just the funnest thing I've ever done. I've got loads of businesses. I've got a wine business and a chemical business, and I was a lawyer in a bank and all sorts of stuff. None of that was really particularly satisfying. Yes, you bring money home, and that's a good thing, for sure. But I wake up every morning and I see these happy messages from people. And I see people who are retiring. I see people who are doing things for their children. I see things who are going on vacations they didn't, they've been wanting to go on for years. And it's just insanely satisfying. So it is the most selfish thing I've ever done because it's the most satisfying thing I've ever done. But that's basically why we teach. Yeah. Okay, Q&A. Q&A. Okay, let's do that. Let's do Q&A. And I will pull up. I promised you sell rules for traders, right? So we covered investors. Now we're looking at traders. Now, many investors are actually traders. If you buy AI stocks, tech stocks, quantum stocks, and you want them to go up by 2x, 3x, 5x, 10x, whatever, you want to double, triple, quadruple your money, you're actually kind of a trader. It's just, we feel more comfortable calling ourselves an investor. And I showed you this chart earlier, plug power, and I'll make this as big as possible for you so you guys can really see this. This stock topped out up here, and then our sell rule, the one I've given you, the 150-day moving average rule, would have sold 56% below the top, which isn't really great, is it? I mean, you wouldn't have sent me a Christmas card, would you? You would have been like, yeah, Felix, your rules kind of suck, right? So it is, though, and I just want to be very clear with this, the buy and hope strategy that most of you come to today's session with, it would have been a lot worse because it is down 96% right now from the top. So minus 56% doesn't seem quite so bad now, right? Maybe you will dust off your Christmas card and send it my way. But no, in all seriousness, it isn't ideal. There is a better rule if you are in these high-risk stocks or if you are trading. So the trader's rule, and again, you might want to write this down, is the 50-day moving average line. Another simple line, but it's a 50-day. So it would have gotten you out at minus 28%, which is actually about right for a stock as volatile as Plug. Right? That thing went up maybe 30 times. So if you're giving back 0.3 times of that, you're actually doing quite well. Yeah? And I think you would have sent me a Christmas card there because you avoided a minus 96% drawdown right now. Yeah? Big difference. Yeah? Time frame, it's always a day chart. I only ever look at day charts, don't look at hourly charts or any of that. We can talk about day trading. I think it's a waste of life, but very happy to talk about it. Yeah. Doesn't work if a stock's only been on the market for 20 days. which is why I don't buy stocks that have only been on the market for 20 days. Yeah, that's another decision there. IPO buying, yeah. You know, you have a stock here with years and years and years of data, and then you buy the one that gives you absolutely no data whatsoever. So, shall I show you some of the stocks that I own right now, and we can talk about where we would sell it? Yeah. Okay. Here's a stock that I own right now. It's called Tenable Software. I bought 2 or 3 software stocks about a couple of weeks back. It's up. It was up at the very top of the market. 66% here. That was the top so far. And it's pulled back a little bit, not a lot. It's probably still up 58% or so. So where did I buy it? I bought it here at the blue line. The blue line's always my buy lines. And I then moved my stop, so my exit, up to this red line. That was the line. Now, right now, that's a pretty big gap, right? We're talking quite a lot of money. So what am I going to do with it? Well, it really depends on a bunch of things. We can talk about portfolio risk management overall. If the position is small enough, that might actually be okay. If the position is a little bit larger, you might want to move that up. And the only line I've got on here is that yellow line here. And that's your 50-day moving average line, right? Which is where that stop sits right now. And you might not want to give all that money back. And there are therefore more advanced rules to this that we're not going to be able to fully cover here in an hour, 2 hours together. And I warned you about that, right? You're not going to learn everything there is to know about investing in 2 hours, like with any skill. It's going to take you a little bit longer to learn. But hang on, I can hear a very important arrival. Winston is here. Winston is here. Here we go. Come on, young man. Come on, sit down. Sit down. How was your little morning hike, young boy? How was your little? It's the morning time here. If you guys hadn't realized, we're in Hong Kong, and he's just been up a little mountain, hasn't he? Are you nice and sleepy? Are you nice and sleepy? You are, aren't you? We're going to go swimming later. We're going to go to the beach, which I've promised him because I've been away for about 5 days, which he isn't a huge fan of. But you are quite well looked after, aren't you, Winston? So, Winston, on Tenable stock, where do you think I should move the stop to? What do you guys think? So if you guys haven't gotten the Winston app yet, by the way, he'll be very upset with you. But yeah, let's go back to making your financial freedom more of a reality. While Winston is sitting here next to me in his glory. Do you have a book you recommend? No, I have a lot of books behind me, and what I can tell you is I've read a lot of finance books. They fall into generally 2 categories. One that will sort of just generally motivate you, and that's quite good. Sort of Tony Robbins' book called Money, for example. It's quite good. It'll just generally motivate you. And then you have the books that are very, very technical, and it'll make you want to kill yourself because they're so complicated. I have yet to find one that's actually really in between. And the other thing I've tried is actually giving people information in a written form. And the problem is it doesn't sink in because you're not applying it. You're not in the market as, you know, the war starts and stops, as the Fed does this or that, or inflation data comes out or something. In that moment, even if you read the right book, all your confidence goes out of the window, which is why I think the only way to really learn is the way that I learned, the way that all my mentors learned. Somebody basically sat next to us. Nowadays with Zoom, it's very cool. We can do this, right? So you can learn from a distance from people who've done this. But I wouldn't bother with the whole book thing, honestly. I would just find somebody to learn from. But yeah, Tenable. So you can make these exit rules also on the basis of patterns. So you could look at that high here and you can say maybe that's my exit. You could also make it the recent low, which would be that one there. Both would be viable, but you have to also realize this is a stock that moves 10% in a day. If you set your 10% stop loss, you're probably out of it by tomorrow. So you have to realize this is that dragster. Remember that car with the flames coming out? This is one of those. And I know it's that, and therefore I size it appropriately. What do I mean by sizing appropriately? And I look at a lot more stocks together. It's what percentage of your portfolio is in that stock. That would be my first question. And if it's, for many of you, you have positions that are, say, 10% of your portfolio. Right? Now, what happens if that stock drops 20% tomorrow pre-market? What happens? Well, you've just lost 2% of your entire wealth, or at least of your portfolio, which isn't a very good feeling. It's going to make you into an emotional wreck, I can tell you. You are not going to be very happy about this. So I would generally go for a smaller position size. And there isn't a hard number. It depends a little bit on who you are and what you're investing in and how diversified you are and so on, and your income streams. But say the stock was 3% of your portfolio, still drops 20%, you've now lost 0.6% of your wealth. Now that'll happen to you probably once or twice a week. Your portfolio will move that much. So it's a lot more manageable. So that's a really important thing, is just, how much are you risking with a particular position? Is that sort of helpful? Is that helpful? You got this down, guys? I'm not telling you a specific percentage. I'm just saying, you need to think about the overall money you're risking when you're buying a stock. And I would say, for me, a pretty hard rule would be you only ever want to risk maximum 1% of your money, probably less. And if you look at it that way, you can work backwards to, well, if my stop is this many percent away from it, if my position is this big, then maybe the position is too big. And a lot of the time, your positions are just too big. You're just taking too much risk on one thing, or you're buying the same thing again and again and again and again, right? There's another stock that I bought about 10 days ago. It's an insurance company. It's called Progressive Corporation, PGR. It went up 12%. It's down a little bit from that top here. Where is my stop? Well, our rule would say the stop should be here, which actually isn't so bad, because my entry was my buy. So this would be your sell. So how much are you risking here in that scenario? Actually about 2% of this entire position. So it's a tiny, tiny risk you're taking there. It's actually not so bad. But emotionally, when you're up here now, you don't want to give back 12%, right? And again, you've got to look at, like, how much does the stock actually move? So most of you guys who are setting stops or trailing stops, I see that in the comments here, you're mostly setting them too tight, because you are very, very averse to giving back profits. All I'd say to you is you set them usually too tight, and therefore you get very small profits when this thing can run up a lot more. So where would I set it? Actually, mine is still down here. I haven't moved it up yet. There hasn't been a clear enough reason to do it. 12% to me isn't a clear enough reason to do it. When something goes up 10%, I do look at it, but I'm not necessarily moving it up. Here's another one that I bought about 2 weeks ago. Another software company. It's called Expensify. I actually talked about this on YouTube, so you can verify that I'm telling the truth. And I bought it here. That was my buy. And it went up 45% in about 2 weeks. It's had, though, some pretty significant pullbacks. Right? It went from here to there. That was quite a big pullback. And then it went from the top here to where it is right now. So you've got to look at the size of these candles, or the size of these candles, and realize it is going to make those movements up and down. So again, I wouldn't be too tight on this. Now my stop is no longer down at the 50-day moving average line. I moved it up a little bit. I think I moved it to here, which is the recent low, which would at least lock in, what's that? Probably a 20% gain. Because I didn't want to give it all back, and it's a very, very volatile thing to do. But you can see there are some nuances to this if you're in these really high risk stocks. It's a little easier when you are in, Apple or something, which doesn't move as much. So it's helpful, though. I know I'm showing you something, that there is something a little bit beyond what we've covered today, but I also just don't want to hold back from you guys. So let me know if this is helpful. Maybe I can show you this as well. So in our in our coaching community. Just pull it up for you. We have modules in all of this. So we have they're quite short videos usually. You know, how to buy, what to buy, but selling. Right? There's selling and profit taking. There's selling for investors. There's definitely selling don'ts. But then there is also advanced selling, and we're sort of starting to touch upon that a little bit. And these are longer sessions that are actually not recorded by me, but one of my mentors who's literally written the book on selling. Great guy, Jesus. And those are very, very useful. But what is even more useful is doing this live. So we run group sessions on this. So today, for example, entries and exits, portfolio risk, stop loss workshop tomorrow, right? Literally you could join that tomorrow. There's another one, there's actually 2 tomorrow. And then the other thing you can do is you can just book a call with the guys. So you can just go in, and if I can find it here, book a call, and you can just say, hey, and we'll help you with who to book with, but say Mark, for example, who's a lovely chap. He chartered market technician and so on, and you can just click a call and then have a chat with Mark on your situation, your stocks and your portfolio. And I think that's really where the ultimate value here lies. That's what we teach one-on-one, right? So if you are interested in that potentially, start by having a conversation with us. So go to justoneconversation.com. And again, let me know if you've booked the call or if you're still in the process of booking that call, and I'll plow through more of my portfolio here. So I also bought eBay a few days ago, and I bought it here. That was my buy. And did I set a stop? I did. And I didn't actually set the stop at the 50-day moving average line, which would have been here, because I would have thought it was too tight. I set it here. Why the heck did I do that? Well, let me zoom in a bit on this. This was the recent low, and all lows will get tested. So if this stock comes down, it's going to break through the line a little bit, and then it's a fairly high likelihood it's going to bounce back up. And maybe you think charts are gobbledygook. I used to think that, but it's actually how it works. Similarly, if you had set your stop at the 50-day moving average line, which is the yellow line here, what do you notice? Well, we break through it, don't we? We break through this. And you don't necessarily want to get knocked out that frequently. So you actually want to be a little bit below the line. Ideally not at a round number. So if it's $15, make it $14.78 or something like that. And there's a good reason for that. So often we break these lines just a tiny bit. Say this one here, Ralph Lauren, which I also just bought. See here, breaks through the 50-day moving average line just for an hour during the day, and then it bounces back up, and then you would have missed out on the whole beautiful rally up. So you want to be a little bit below that. But let me show you this one, because this is a losing stock for me at the moment, and I also like to show you some losers, because people never do that, right? People go, oh, my stocks are up, I'm only ever winning, I'm a genius. And that's not how it works. So I bought this stock, I bought here, that was my buy line here, buy, right? That line there. And it's pulled back. And it pulled back till here. And now it seems to be bouncing back up, hopefully. So where was my stop? My stop was this distance away from the 50-day moving average line when I bought it. So my stop was here. So that was my exit. And I actually hadn't moved it up. And I quite like actually what I'm seeing. Yes, it did pull back, but it didn't retest the 50-day moving average line. Instead, it's jumping back up. And I know this is a little bit more advanced. So for some of you, your head is like splitting. But again, hopefully this is somewhat useful. Ralph Lauren might be a winner. It has nothing to do with my love for Ralph Lauren. I do actually like some of their clothes. I was in New York, and I try to make an impact with my spending on the bottom line. But no, they have a beautiful store on the Upper East Side, really, really beautiful. But no, nothing to do with that, honestly. It is purely I see a pattern on the chart that makes me interested. And we're not covering buying today because we don't have time for that. But it's this. This is it. That's this, I call it the heartbeat pattern. You sort of go sideways in this heartbeat. You break out of it here, which is what it did, and it typically looks pretty interesting. That's kind of a whole nother thing to learn. Here's another one. It's called tricky. How do you pronounce that, guys? TREACE. No idea. Anyway, TMCI is the ticker. Dental instruments. Ouch. And I bought it a little late here and went up 19%, and it's down a few percent on that. It's not about 15% up. So where do you set the stop? Let me ask you guys. I put a few numbers on the chart here. You could set it down here. That would be number 1. You could set it here. That would be number 2. You could set it here. That would be number 3. Or you could set it at your entry point, which would be number 4. What are you thinking? 1, 2, 3, or 4? Okay, lots of different numbers, and that's about right. I would say it would depend. I would say it would depend on your overall portfolio. It would depend on, do you have a lot of other medical stocks? You do have to look at the size of these candles. How much does the stock move in a day? Actually quite a lot. So the likelihood of us moving to here is pretty great, right? So 4 would be, you're going to get knocked out on day 1. 3 is still pretty tight. So yeah, probably 2 is reasonable. Or if you wanted to take a lot more risk, it could be 1, and then you could gradually move that up, by which point you would actually right now be more or less at 0.2. So I would probably go for 2, but again, there isn't a hard rule. There is a range of rules that you select from once you understand your overall portfolio. What's the overall risk management looking like? Because most portfolios I look at, okay, so the stock market is basically, it's a picture a chessboard, right? Lots of squares. I'm not going to draw all the squares, but you get the idea. And one of them is called software, right? And one of them is called, I don't know, chips. And one of them is called insurance and so on. And one of them is called, dental machines. Most of you don't have a portfolio that looks like that. Most of you have a portfolio that looks like this. Tech. And you are therefore, no matter what you're doing, taking far too much risk. And you're missing out on all the beautiful things that could make you money in insurance and dental hygiene and God knows what. And I often find I make most of my money not with tech stocks, but with other things. So that's definitely very, very, very important thing to get your teeth into. So questions. Let's look at some questions. Let me come up with one question that I think most of you have. Anybody wondering what broker to use? Anybody wondering that? Okay, so first answer there would be use your broker because it's probably just fine. If you don't have a broker, so you're just a broker virgin, then if you are in the US of A, 250 years and all that, congratulations. Someone actually gave me a hat last week that said 250 years, America on it. So that was quite nice. I got a New York Yankees hat as well. I got given quite a few hats when I was in New York. I would use Think or Swim, which is what I use, which is owned by Schwab. If you are in the world, which for Americans, it's the thing that is outside the United States, the things you like to sort of bomb occasionally, just teasing, I would use Interactive Brokers, which I also use. It's a little bit more hideous, but it's also very powerful. But if you have a broker, just start with yours. Yes. Secondly, and I will go into your list of questions that you're putting in the chat here, but of course we have 3,000 people live. It's going to be challenging to answer every question, which is why we take calls wherever that is down there, because then you can actually get an answer to your question, and then you can get a follow-up answer to your question. Anybody worried about taxes? Felix, if I make more money investing, I'm going to have to pay more taxes. I don't like that. Yes? Yes? Okay. Let me pull that one for you. If you make an extra $1,000 because you are now making better investing decisions, what happens? Well, you live in some sort of socialist country, which we all do, because actually there's nothing wrong with socialism. I mean, we all agree that there should be social security, right? We just don't want to have huge taxes. Say you pay a 30% tax. Some of you might be more. What's the outcome? $700 more. So you get $700 more. I know you're paying some tax, but you're getting $700 more. If you decide, I don't want to make better decisions, I will continue to pile up big losses because that way I pay less tax, well, then you will have $0 extra. So my question, and it is a very serious question, is would you prefer $0 extra or say $700 extra? Again, put it in the chat down below. Literally put 0 or 700. I'd like to see it. Okay, mostly 700. There was 1 0. Who was the 0? Hang on. There was 1 0. Blaine, my friend. Google has a marvelous feature for you, and it's called Insane Asylum Near Me. Put that into your Google, and you will find one, and then go there and report, please. Yes, because you are certifiable, my friend. But no, in all seriousness, tax doesn't come into this. Yeah. Tax is something you deal with before you make investing decisions. It never enters into whether or not you're buying a stock. So there's some beautiful things you can do if you are an American. Roth IRAs are a wonderful thing to do, right? Good old Peter, I will make the world a better place, Thiel. You know that guy, PayPal and Palantir and so on. He's got, last time I read, he's got $12 billion in his Roth IRA. So, you know, go nuts with the backdoor Roth IRAs and all that stuff. So do that. But then when you're actually looking at a stock, never ever think about taxes. We never think about taxes when we're buying or when we're selling. We've dealt with this before, and obviously talk to AI about your taxes, and then find a tax advisor. I'm not one. And figure out what's the best setup for you depending on where you are in the world. And Peter, yeah, if you take profits and you reinvest that profit, you have to pay profits on that. I'm not a tax advisor, Peter, but you've got to figure this out before you make decisions, so it doesn't impact your decisions. Exit rules, yes, exit rules clear. Have we got some questions? There's also a question thing in here somewhere, right? Q&A. Should I sell index funds? Asks June here. Okay, that's actually a great question. It's a very, very good question. Let me pull up a chart for you. Here's still the insane asylum for Blaine. Say you buy the S&P. And I mean, Blaine probably just has a sense of humor. I hope. He's probably writing nasty things about me right now on Trustpilot. Felix insulted me personally on a live training. I hate the guy. Okay, the S&P 500 is somewhat of an exception to the rule. Why is it an exception to the rule? Well, actually, let me type so you can read what I'm saying in a slightly less menacing color. If you buy an index, so I'm talking S&P 500, big index. What is it? Well, it's the, say, top 500 US companies. Now, it's never become the S&P 498 because two companies went bust. No. When two companies become crappy companies, they add two better companies. So it always stays the S&P 500, always the 500 largest American listed businesses. And therefore, in the long term, this goes up. At least it has done for the last 100 years or so. And if you take into account money printing and the government spending lots of money it doesn't have and so on, all that money gets spent and it arrives in these companies' bank accounts or with investors who then buy the S&P 500. So I would argue that the S&P 500 will go up in the long term. It'll have some pretty nasty pullbacks. I mean, COVID, 35%, right? You get these a lot. Or 2021, we went down 28%. You know, this will happen. This will happen every few years. You'll get your 30% drawdown. But you could just buy this every month and just keep buying it. Completely fair. And you could even buy it when it's down a lot, because that would be another way of maybe buying it cheaper. But it only works if your time horizon is a long one. So I would argue that you need a 10-year hold period, which means if you buy it today, you don't need to sell it in the next 10 years. You don't need to sell it. So you don't need to touch that money. And in that case, buying the S&P 500 is great. It'll give you average returns. Now, if you want average returns, that's a whole nother conversation. Or is it possible to get more returns? That's a whole nother conversation. I believe it is. I'm not promising them to you. I don't promise you returns. I just promise you some better decision making here, based on things that we've learned. But yes, index fund, a broad index fund is slightly different. Now, what isn't different, if you buy this thing here, which is the quantum ETF, it's an index fund, so it owns lots of quantum stocks. But this thing could literally go to zero. Why? Because it's just a bunch of quantum companies, and maybe quantum as a technology doesn't work. Or there's something better that comes along that's cheaper. So you can't do it for that sort of an index fund. You can only do it for a broad index fund. Does that answer your question? I hope it does. Do you find your stocks using a screener? Yeah, we have our rules. I then publish them once a week for our students. But of course, they have the rules. They also have access to our screener. And I can't possibly run when to buy seminar in the next 15 minutes. It just isn't feasible. But the heartbeat, institutional money, following the money is essentially what the shortcut is to that. We follow the freaking money. You want to know some more about that again? Have a call with us. Those calls are completely free. Okay, some of you are asking about individual stocks here, and I will generally ignore you, but let's look at one. Something like Micron, for example. If I tell you I would set the line precisely here for that reason, how long would that be useful for you? What do you think? Seriously, if I told you on any given stock you guys are asking about here, Michael says 24 hours. Yeah, that'd be quite generous, actually. David, 12 hours, you're probably about right. I think the futures market opens in 12 hours. And depending on what El Presidente does with Iran, this will move a lot. So you want to be in a place where you no longer have to ask me for fish because you now know how to fish. And that's the difference between, giving somebody food because they're hungry and giving somebody a skill so they're no longer hungry. And that's really what we do. So we don't give you tips or alert services or any of that nonsense. I want to make sure you don't need us. That's really what I want to make sure. There's a bunch of things I would look at with this. One would be, 50-day moving average line would be a decent place, right? There's this, which I'm a little concerned about, which would actually get us to the same outcome. So that's probably where I would set it. Doesn't mean you should, but that's where I would set it. So it is a slightly concerning place at the moment for Micron. But then if you bought it here, which is where the last proper entry point was, you'd be locking in an 82% gain, which is pretty freaking great, right? So don't try to sell the top. me give you another example. This is a stock from last year, Avis. And I bought this car company, car rental business, right? Very sexy. I bought it here at $98 based on our entry rules. And it went up 112%. Where did I sell it? I sold it here at about 88% or something like that, somewhere around here. I didn't wait for the 50-day moving average line. No, I sold it after this big drop, because that's generally a pretty big warning sign. Was I upset that I didn't lock in the 110%? No, I locked in like 89% or something. I was very, very happy. And I moved on and I put my money into something else. Now, with hindsight, yes, it went down a lot, right? I didn't have hindsight, though. You don't either. It went down 60%, and then it went up some ridiculous amount, and then it collapsed again. And it's actually now below where I sold it. Don't try to predict the future. You don't have a crystal ball, nor do I. You just got to work based on the facts that you have, on the data that you have, and you need good rules for that. And once you have good rules, you'll be able to make much better decisions. I've given you quite a lot of rules today, but is there more to it? Yes. I told you that at the very outside. It's just like when you first started driving a car, right? How were you feeling when you first started driving a car, the first hour? Pretty stressful, yeah? You wondering what you're going to hit the right pedal, maybe? When was the last time you were wondering whether you're going to accidentally hit the brake pedal when you were trying to accelerate? You don't think about it, right? Because you mastered the skill. If I was to throw you into a swimming pool, would you think, should I use the right arm first or the left arm, and should I kick my feet? Or you wouldn't really think about that, would you? Because you've mastered the skill. It's become second nature to you. Managing your money is exactly the same thing. It's just very, very few people ever master the skill because they haven't been given access to the tools. And the way one of my early mentors visualized this for me, he wrote this down for me. He wrote down, Felix, you are here. And it's a pretty good place you are, he said, Felix. It's not a bad place you are. And he said, your best skills got you there, your hardest work got you there, your best efforts got you where you are. But you're coming to me because you want to be up here. And I said, yes, I do. And he said, there's a problem. There's something in between. What are those things in between? What do you guys think of those things in between now? Between where you are or where you want to be? Because you want to be somewhere, otherwise you wouldn't be here. Learning, obstacles, ups and downs, milestones, steps. Discipline, skills. That's what I would call it. It's just skills. Driving a car is a skill. Swimming is a skill. Most things in life are a skill. And there's a problem. And the problem is this. Learning skills, there's an obstacle to it. If there wasn't, 3,000 of you would have booked a call and be learning right now, right? And I know that's not going to happen. And the reason many of you are not doing that is because you lack this. You lack a why. A strong enough why to make you want to learn the skills. Right? Most of you are just going to go, I'm going to get on to this later and I have a bit more time and in the summer or after this or whatever, when my life's a bit better. And typically that never happens, by the way. Well, I'm just going to see how it goes. It's been fine the last few weeks and you've forgotten about the pain of the beginning of the year or, whatever. You need a why. And a good why is a why that is about people you love, not yourself. And I'll show you in a second how you can come up with that. For me, I threw a lot of whys at this guy and he basically turned them all down, including, I want more money, I want more holidays, I want more freedom. That wasn't really it. I ended up on, after I sort of went from up here to a bit lower, which isn't always that easy for us guys, I said, I want my family to be proud of me. That's when he started teaching me. And there's a shortcut to the whole thing. Have a why, realize you're down here and all your hard work and you trying harder and you working, all that is still going to keep you here because you've already tried that. And then if you want to get up there, you find someone who's already up there. And then you ask and say, can you teach me how you got up there? And he'll say, hopefully if he's kind, Yes, and you say you got to learn some skills. That's the secret to life, in all honesty. Whatever you want to learn, you find someone who's already done it, and you ask them how they've done it, and then let them teach you. Yeah, that's pretty much it. Now, how do you come up with your why? Maybe share your whys in the chat here. Essentially, your why is a want list, right? I used to find it very, very hard to write down what I actually wanted because I was just so blocked by working long corporate hours and so on. I couldn't really think. So someone said to me, well, make a hate list. I was like, oh, that's easy, 6 a.m. alarm clock, commute, if I could spell it, worrying about bills or, whatever, that kind of thing. And then you write the opposite. You just write the opposite and then you got your want list. And hopefully you're going to go a little bit deeper, and it might be you want to do something lovely for your wife or your children or your parents or your golden retrievers or something, and that'll be your motivation to actually for actually taking some action. And the one piece of action you can take today is you can have a chat with us, and it's free. And some of you might be annoyed that I'm driveling on about psychobabble, right? Who's thinking that? Self-help gibber, I didn't come here for that. And the reason I mention it throughout this is that where you are right now, the success of your adventure that I call investing and getting you to your financial outcomes is 100% mindset. It is literally at this point, it's nothing to do with learning the skills that I've just taught you. And the reason is that you need to make a decision to actually get serious about this and actually learn this. Yeah. What I've done today is I've thrown you into a swimming pool, and then I've thrown some life vests after you. And I've taught you in principle how you want to move your arms and legs. But you will still suck at it. And that's okay. We all do when we start. And you then need to commit to coming back to swimming lessons next week. And I know for many of you, you won't do that, unfortunately. And what happens is that most people only ever take action when they get this one thing. They get great big pain. I was the same way, by the way. I really got serious about investing when I got a massive disc hernia. Couldn't walk for 6 months. Horrible pain if you've had that. And for many of you, you come to us because you just lost 60% of your money or on a particular stock or something, like that kind of horrible thing. And then that's the pain that you needed. But what I'm saying to you is, if you go and do my silly exercises and you write your hate and your want list, you think about why you actually want this, then maybe we can spare you the pain, which we've done for many people, and you just realize this mindset gibber he's talking about is actually important. And once you've got that out of the way, then yes, we can teach you the skills. And then it becomes for you almost 100% learning skills. And again, I struggle to spell the word skills. It goes to show you this has nothing to do with intelligence and all to do with somebody teaching you the skills. And once you learn that, it then becomes, probably 50-50 mindset and skills. And then over time, the skills are so natural to you, it becomes more and more mindset again. Yeah. So let me see what some of you guys wrote in the chat here. Jared writes, you're doing it for my children, and that's a beautiful thing to do. Leaving a legacy is a beautiful thing to do. Doing it for your children, wanting them to have a nicer life, doing it for your spouse, doing it for your family, doing it for friends, or whatever your cause is. Not worrying about medical bills ever again. That's probably a pretty powerful one. Warren Buffett is the best investor in the world. Just follow what he says Andre. It's a problem with that, my friend. He doesn't say very much. Buffett as an investing input, and I think it's 2 T's, isn't it, is challenging. I tell you why. How much cash have you got? Buffett's got 300 billion. How much cash have you got? What are we talking about here? Somewhere between 10,000 and probably, 1 million, right? Something like that. 1.1 million, or whatever. That's where most people are, right? In this room, probably. So you're going to make very different decisions. That little stock earlier that I bought, this one here, Expensify, right? How big of a stock is that? Let me have a, I can look that up, can't I? What happened here? Oh, I got locked out. Okay. XFi, let me look up the stock. How big is that company? It's a $180 million company. Buffett can't buy that because he would buy the whole company with the smallest order he could place. I can buy it, and I can make, how much are we up by on that right now? We're up 35% in 2 weeks. It's not bad, right? Again, I'm not promising the outcome. I'm just saying it's not a stock Buffett can buy. Buffett's decisions are actually very difficult. You can buy about a handful of companies in the world, maybe 30 or 40. The rest he can't invest in because he's just too large. So if you use Buffett as your metric, you're going to do very little. And you're going to find out what Buffett has bought about 45 days after he's bought it, because that's when he's obliged to tell you. In fact, he often gets an exemption from telling you. The government gives him an exemption so he can tell you 90 days later. Right? The world's fair, isn't it? But we actually, as small investors, and you're a small investor, you know, till you are in the sort of multiple billion space, we actually have a lot more choices. There are thousands of companies that we can invest in or trade. So if you like Buffett, I have huge respect for the man. He's one of the most disciplined investors. He's compounded for a very long period of time. Buy the Berkshire Hathaway stock and just hold it forever, treat it like an ETF. Can't guarantee it'll make you rich, but it's essentially an insurance business, which is essentially reinvesting the insurance money. So it's sort of like an ETF, which isn't a bad idea. But I would not buy and sell what Buffett's buying and selling. I wouldn't. Plus, he also doesn't win all the time. And yeah, Berkshire's a great stock. I'm nothing against it. I'm just saying I wouldn't 100% follow what anybody's doing. Who are good market advisors? You are. We've just been taught that we should ask someone else. We've been taught that you need to talk to your financial advisor, and you should if you have a good one. But you also should realize that that person is no smarter than you. That person doesn't have a crystal ball. And if you had your bank manage your money for you, you probably would have realized that by now. You spend literally 40 years plus, 8 hours a day plus, doing what? Bringing in money. And then you've been taught, oh, just hand it over to some guy you don't know and you know nothing about. Right? Have you ever asked your financial advisor, can I see your private portfolio? He won't show you, I'm sure. Ask your banker that. They won't give it to you. Now, last time I hired a coach, it's a tennis coach. I was at Monaco 3 weeks ago. She was the world number 2 tennis. She'd beaten Serena Williams at the Paris Open. I knew exactly who she was, and I knew she was 1,000 times a better tennis player than I was. That's why I paid her. Right? But with money, we don't ask those questions. It's weird, isn't it? If you go into a gym and you look for a personal trainer, do you find the fat guy? No. You see how fit the person is because he's standing in front of you, wearing a silly tank top, probably. Right? So you know. With money, you just go, oh, just hand it to some guy. Just listen to some guy. And then the second thing, if you listen to these famous investors on CNBC or whatever, there's something that we call sell the book in banking. What does that mean? Well, you're a bank or a fund. You buy a stock, buy Google or something. I saw someone mention Google. Buy lots of it, $1 billion worth of Google. And now you're going to go on every talk show, on every TV station, or every YouTube channel will have you, and you'll tell the world how great Google is. Right? So they're selling something. You see what I mean? They're selling a stock that they already own, and then they probably offload it while everybody else buys it. Yeah? Which is the way it works. Nothing illegal about it. Sort of a fair enough strategy if you have that kind of profile, right? So what I'm saying to you with all of that, listening to somebody else, you need to understand who they are, their credentials, are they qualified, and then why are they telling me that, right? And that's why I don't give you stock alerts. I don't tell you buy this. I tell you these are the rules that I learned from my boss. I learned from my Wall Street mentors. And all my Wall Street mentors have learned from their bosses. And they're the same rules that have been around for about 50 years. And we use them every week. And we implement them every week. And by the way I implement it every week, I do it on Sundays. So on Sunday, I sit down for about 2 hours. And that's because I prepare this for you, the notes and the watch list. Otherwise, it would be a little bit quicker. Why would it be quicker? Because on this list are like 100 stocks or something. Now, I have no interest in buying 100 stocks on Monday. So I would probably stop after, 5 stocks. Because I'm providing a service to my students, I will continue and I'll do 100. So that's why it takes 2 hours. Otherwise, it wouldn't take very long. And what's my process? Well, I find a couple of things I want to buy. And you don't need 100 stocks to buy because unless you won the lottery on Saturday, it's very unlikely you want to invest that much. And then I look at my stops, the exits, and I'll move a few of them up, and that's it. And then Monday to Friday, I'll do absolutely bugger all. I don't do anything. Actually, this week, I was in Malaysia. This is the phone that has access to all my brokerage accounts. I forgot it at home. I didn't have sleepless nights. I didn't try and courier to myself. It was at home. It was on my desk here. It was dead by the time I came back. I don't need it because I've already decided and set up automations when things are going to get bought and sold. And you got to ask yourself whether you would feel better doing that than what you're doing right now, whether checking your portfolio every day or 10 times a day makes you feel better and improves anything. And whether that's something you might want to learn. And if it is, have a chat with us. JustOneConversation.com. The link is still down there. And what's your take on the number of stocks to own for a beginner? So it really comes down to risk management, my friend. So number of stocks, if I could spell stocks. So if you own 5 stocks, or you own, say, 30 stocks, or you own 100 stocks, right? What's the percentage of portfolio? Well, each stock is 20% here. Each stock's about 3% here, and each stock's 1% here. And then I'd ask you again, your stock will, at some point, some of them will, drop 20%. So if one of these stocks drops 20%, how much of your wealth have you lost? Well, you've lost, the thicker pen, you've lost 4% of all your money. It's going to feel horrible. In this case, you've lost 0.6% of all your money, and in this case, you've lost 0.2% of all your money. So you can kind of figure out how many stocks you want to own from now. Now, I would say owning 100 stocks is a pain in the neck to manage. I wouldn't bother. So I would probably be somewhere around this zone. It can be 10, it can be 20, it can be 30. Some people love a spreadsheet and they'd like to do a little bit more. Probably very little value going beyond 30, I would have thought. I used to check my portfolio every 5 minutes. Huge mistake. Yeah, it doesn't really do anything for you, does it? I mean, I've also tried staring at charts for hours at a time and willing it to go up, and it just doesn't work somehow. So I gave up. And I just set a rule on when it's going to get sold, and then I continue with my life. And probably the best thing most of you can actually do is do this investing thing in an hour or two on Sunday, and then for the rest of the week, focus on making more money. Because if you can bring in a little bit more money into the portfolio, it'll have a huge impact. I don't work on Sundays. Okay, do it on Saturday, Friday night, Monday morning, just any time the market is closed. Do you auto set your sells? Yes. Gold and silver comments. Okay, crystal ball or something useful. We didn't cover buy rules today, but this is the gold chart. This here was the probably the best textbook example of what I call a heartbeat pattern I've seen in a long time. And did I buy gold? Yeah, right? Of course I did. It went up a lot, and then it's gone down a lot. Now gold, it's a funny one, because if you're a trader, you probably should have sold here in March. You would have sold around $4,800, $4,900. And you would have locked in a very nice 40% gain. But some of you, including myself, buy gold as a sort of inflation hedge against the world ending. You know, I can go and carry my bars and buy food with it sort of type thing. In which case, the value of it matters a little less because it isn't really investing. It's sort of like planning for the end of the world. In which case your rules might be a little bit different. You might just be someone who just keeps buying. And in that case, buying significantly below the 200-day moving average line has historically actually been quite a good place to do it. Buying something like this that you want to hold forever but nobody else wants it is usually the best place, except everybody buys it at the top. But that's a whole nother conversation, I think, for another day, perhaps. If your stock gets triggered, says Leo, do you buy it again? No. No. I will buy it again if my buy rules get triggered afterwards. So I've often bought and sold the same stock again, over the years, but it's not because of that stock. I don't care what the stock is. Think about it this way. In 5 years' time, say you make a lot of money investing. I'm not promising you that, but I'm just saying. Is anyone going to ask you what stock you made the money with? Maybe. And what about in 25 years' time? No one's going to care. No one will even remember the company. All you'll care about is that you've got more money and that you're sitting somewhere retired on a beach or on a veranda or whatever, or maybe you're doing something meaningful. Maybe you're sort of giving back. Maybe you're doing something really fulfilling at that point. And that's really, I think, the beautiful thing. And I hope you guys realize this isn't actually about money. Money is just something that gives you more options. And money is something that I think allows you to do what you actually put here for. Because I don't think we're put here to sit in a cubicle and do some job. I think we're put here to do something that actually has a meaningful impact on others. And that makes you wake up in the mornings and go, I'm going to have an amazing day because I love what I do. And I'm going to help some people. And whatever that might be for you can be very, very different, right? But we've all been conditioned through schooling, right? Sit on a desk, stare to the front. They do that with children, so they break their spirit of wanting to do something unique. It's Prussian. I'm German, right? The whole school system it's a Prussian invention to create factory workers, because of course nobody wanted to sit at a little desk and assemble things for 8 or 10 hours a day. So school breaks the children, and we've all been broken in a sense. So we need an extra effort, which is why I talked to you about your why and your reason to get out of that prison. And you can, and it's a beautiful thing to see people do it. Very, very satisfying. It requires some effort. So I'm very proud of you guys who are here today and you're showing up for yourself and you're learning. Very proud of you guys who are taking it even one step further and are going to talk to my team at justoneconversation.com. And the one thing I would say with those calls is bring your other better half. If you're going to learn with us, you have teenage children, bring them. Bring your spouse for sure, because we can then impact more than one generation. As a couple, you'll do better. So if you haven't already, it's on the screen here. And I'm happy to take a couple more questions, guys. I'll just have a look in the chat here, see what you guys are doing. But obviously, the scale of these events, which is really fun, means I can't realistically answer all your questions. And I'm sorry about that. It's just the way it works. But it does allow us to hopefully impact more people who will then do something about this. So really, the only thing I'd say to you is find someone to learn this from. It doesn't have to be me. Like, I might be really irritating to you or whatever, and that's fine. Find someone who's done this before. And by done this, I mean someone who's worked in an investment bank or a hedge fund. They typically know what they're talking about. Learn the rules. They're much simpler than you think. Like the rules I gave you today, they were actually pretty simple, right? They were not difficult. They just they seem a bit random. And why are they what they are? I don't know. It's just they've been around for 50 years and everyone's been taught them. And that might be why they are what they are, because we've all been taught the same thing. So don't try and reinvent the wheel. Don't try and be clever about it. Investing's got nothing to do with smartness or intelligence. And it's got everything to do with rules and skills and yes, some discipline. And we handle the discipline with automations. And also by holding you accountable for like 6 or 12 months if you learn from us, because we talk to you every week, it creates that rhythm, it creates that process that you'll then have forever. And you can teach it to everybody else around you, which is really our goal. And I'm pretty confident it's going to be a great experience for you. And if it isn't, as I say, we have a complete 100% guarantee on that one too. So I hope today has been useful for you. Yeah, that comment on schooling there isn't very popular. I was in New York last week, and it's like kid I met there, and I say kid because he's 23 and he's built a startup that's probably already worth about $10 billion. Very smart guy, and he said to me he went to a Montessori school, and then he quit school at 16 because he was too busy with his startup. And he said it's the best thing ever because they don't make you do that. I've never been to a Montessori school, so I can't tell you. I went through a very traditional education of Latin and that kind of thing. But I think we live in a world now where these kind of fixed jobs are going to get less and less. The opportunities out there I actually think are tremendous. And I think encouraging thinking and the beautiful creativity that we see in children and not killing that off, I think must be a good thing. So not endorsing a particular school there, but it's just something that he told me last week, and it seems to have worked out quite well for him. Working sucks. Yes, unless you do something that you really love. Like I don't call what I do work now. People often say to me, oh, Felix, but you're not retired, you're working, you're putting out YouTube videos. You do, I don't know, 3 videos a week or something. I'm like, yeah, I know, because I love doing it. I do it on holiday, I do it on the beach because I love doing it. I'll read something on a plane or something and be like, this will be really useful for people, I hope. And then I'll make a video and I'll share it with you. Or I run these sessions for you on the weekend sometimes. And I love this because I can actually teach you something and I actually have your attention. And I can take you through stuff in 2 hours that you'll probably never ever see otherwise. And my hope is that it'll spark something within you to take the next step, because that's what I can't do. I can't force feed you for the next 6 or 12 months financial education. You have to take that upon yourself. So I can sort of pull the curtains back a bit and give you something really useful that hopefully you will then see, okay, this is really useful. What if I got better at this? Right. So for me, honestly, the slowest hanging fruit is just having your money work for you. You all own a business, and it's whatever is in your bank account or in your brokerage account. And you are undoubtedly mismanaging that business, or maybe you're not managing at all. And it's a huge opportunity. So don't beat yourself up about it, because everybody does it. But it's a huge opportunity, and it takes it takes me 2 hours a week. And that includes me preparing a lot of stuff for students. So you could do this probably in an hour a week. And if you think about how many hours you work every day, you've got an hour a week if it's important enough for you. So really, it's just, is it important enough for you? Yes. If it is, have a chat with us. Be a first place to start, right? At least after that conversation, you'll have a bit more clarity. And then if you don't like us, you'll go and find somebody else. So justoneconversation.com is where we do that. My grandkids will thank you in a few years, Brian. And that's my hope, Brian, very much so. And we actually have, students we have one student in particular, she's a lovely lady, and she was with us for a year. She'd never bought a stock before in her life, didn't have a brokerage account, literally one of those, we had to teach her how to set up a brokerage account, and she was 78. It took a few hours, I can tell you, but it's fine, we have the patience for that. And she did insanely well, like literally really top of the class. She just did really, really well. And she was like, this is amazing. I can't believe I haven't done this for the previous 77 years. can I bring my grandchildren? I've got 5 of them. And we said, yes, absolutely. So they're doing that with us now. So her and her 5 grandchildren. And the impact that makes is it's just beyond. And it's, yeah, nothing could make me happier. Literally nothing could make me happier. So, Brian, do exactly that. Teach your children, teach your grandchildren. And let me scroll down here. A PDF, yeah, we will email you a summary of this. Tennis balls for Winston, yes. We're gonna go to the beach and go for a bit of a swim. Trade Vision or Winston app, if I had to pick one, they're different beasts. Trade Vision is sort of for the trader, for that sort of decision. Winston app is more for the investor because it gives you those fundamentals. It gives you the index funds. And by the way, you can do all of this with index funds. You don't have to buy stocks if that scares you. You can completely do all this with index funds. You can lead a horse to water, but you cannot make it drink. This is Michael. Yeah, that's quite well put. That is very well put. Thank you. Would you analyze ETFs like stocks then? Yes, with the exception of, say, the S&P 500. But yes, if you're buying a quantum ETF or an AI ETF or a semiconductor ETF or something, then absolutely, I would treat them exactly the same way. It's a stock, or it's a stock of stocks. 75 years started 3 weeks ago. William, brilliant, my friend. It is never, ever, ever too late to do this. Does Winston prefer balls or frisbees? Ball. He never really got into frisbees, actually. I don't know why. Ball. He does like ball. He really likes those. You can get these rubbery, bouncy balls. They glow in the dark, which is actually very good because I play with them a lot at night. Because in the summer it's very hot here. We're in Hong Kong, and it's sort of Miami climate. So we play a lot at night in the park. He loves those. They're really good. Who makes them? I can't remember. But they're sort of squishy and very bouncy. He likes them. But any ball or a stick, or for that matter, and Winston is usually very happy. Or waves and beaches also make him very happy. Mountains are also very good when it isn't too hot. Wanda, appreciate that. I'm glad I answered some of your questions. Does he like to swim? Yes, he does. He loves to swim. He would live in water if you let him. He thinks puddles are water too, so he's always filthy. Workbook, yeah, we'll email that to you. We know you're here, so we'll email that out to you. Is it 150-day SMA? Yeah, S stands for simple, Michelle or Michele. So always simple. If in doubt, always simple. That's what my mentors taught me. Nancy, appreciate that. Do you have ethical considerations investing in a company that is unethical, Robert? Yes, absolutely. And you know, I try to avoid most biotech for that reason. I don't like monkeys being tested on, that sort of thing. For some of you, that might be defense stocks. It might be political things. It might be, you know, whatever it is. Look, there are 5,000 stocks out there that are, you know, American listed stocks that you could trade today. So exclude what you don't like. It'll make bugger all difference to your long-term returns. So yeah, just do what makes you feel good. That's a very important thing. And that's also with risk, just very important. Can you sleep well at night? Right? So position sizing, risk management is quite personal, which is why I can give you the rules, but we need to still have that one-on-one conversation and establish, you know, where's your stomach lining test? That's what I always ask people, like, does this impact you? Are you thinking about this during the day? And if you are, then we need to take the risk back a little bit, because money is there to make you, allow you to have a better life. It isn't there to make you stressed out. If you're doing that, then you're doing it wrong. What's the best broker in the UK? I would say Interactive Brokers. I'm not sure if Thinkorswim is available in the UK, but those would be the 2 brokers that I would look at. Golden's a hunting dog, swimming's in the DNA. Yeah, I think they were trained to retrieve the ducks that have been shot or something, right? So they will do that. Yeah, they will carry things around. Is Think or Swim easy to learn? Yes, actually, surprisingly. And we also run sessions on that, both one-on-one, but also group sessions on that in the academy. Workbooks will be emailed, my friends. I love you for showing up. I love you for being here. If you haven't booked your call yet, this is probably your final chance to do that, justoneconversation.com. And I wish you a beautiful, successful year ahead. One of less worries about the news and the noise, because you know that your money is set up in a good way, in a professional way. Got your risk management, you know what to do, you know what to buy, you know where to go. And that's really only something that you can do. So I hope you're going to do that for yourself and your family, because it's probably the one thing that's going to give you not just tremendous difference in how you live, but also a tremendous difference in how you feel. And that's certainly what I found. I think I'm a lot calmer. I think I'm a lot less stressed than I used to be, because I know what's going on there. I love you for showing up.